Good morning and welcome to Economy and Market on Business Day TV, where we give you a comprehensive insight into the economy as well as the market. So we're starting off with some of the business news headlines that are making the rounds. First of all, Dangote is pledging 50 million naira, 50 million liters of petrol to Nigerian starting from December the 1st, which is today. Dangote Petroleum Refinery says it will begin supplying 50 million liters of petrol per day to the Nigerian market starting on the 1st of December. The company says it forms part of a broader plan to deliver 1.5 billion liters of PMS monthly through the festive season into early 2026. This announcement was made by Aliko Dangote during a tour of the refinery by the South-South Development Commission. He said the refinery currently produces between 40 and 45 million liters daily, adding that the new supply level should help prevent fuel scarcity that is typically associated with the Yuletide. Dangote also disclosed that formal notification has been sent to the midstream and downstream regulator, and supply is expected to rise to 1.7 billion liters in February. He said the refinery is working with petroleum marketers to ensure nationwide distribution while also supporting the transition to CNG-powered haulage fleet that is expected to cut logistics costs and improve efficiency. Then we'll move to the news of Oyeyimika Cardoso, the CBN governor, opening the door to rate cuts in 2026. The CBN governor said that the CBN may resume interest rate cuts and tighter monetary management. He said interest rate adjustment will be guided strictly by data. The governor outlined key priorities for 2026, including strengthening the banking system, protecting depositors, modernizing payments, and deepening financial stability. He added that fintech innovation will be encouraged, but with stricter rules on consumer protection, cybersecurity, and digital asset oversight. Cardoso also reaffirmed that the era of deficit financing by the CBN is over, stressing that monetary discipline and price stability will remain the CBN's core mandate. Then OPEC has retained Nigeria's crude oil production quota at 1.5 million barrels per day through to December 2026. This decision was reaffirmed at the 40th OPEC and non-OPEC ministerial meeting, where members agreed to maintain existing output levels under the Declaration of Cooperation. The group also approved a new assessment mechanism to determine each country's maximum sustainable production capacity. This framework will be used to set production baseline for 2027. OPEC's Joint Ministerial Monitoring Committee will continue to track market conditions and output compliance ahead of the next ministerial meeting that is scheduled for June 7, 2026. Meanwhile, in a separate update, OPEC said that 8 OPEC Plus members, including Saudi Arabia, Russia, Iraq, and the UAE, have agreed to pause planned production increases in the first quarter of 2026 due to seasonal demand trends. The countries will also continue withholding a 137,000 barrel per day increase previously slated for December. They will meet monthly to review market dynamics and compliance. After the break, we're going to return with a little bit of insight into what happened in the markets from last week. Stay with us. Welcome back to Economy and Markets. Over the week, between the week starting November 25 to November 29 to November 28, rather, we saw quite a bit of action in the NGX. We saw some announcements, some resignations. However, we're going to have a quick break and a quick update of some of the top 3 that caught our attention. First of all, Cadbury Nigeria appointing a new interim managing director. Cadbury Nigeria has announced a major leadership change as it begins a new phase of transition. This announcement came on Thursday. So the company says that its finance director, Folake Ogundipe, has been appointed as the interim managing director. This is following the retirement of its previous MD, Oyeyimika Adeboye. So Oyeyimika Adeboye was the first female managing director of the company since its establishment in 1967. She steps down. She's expected to step down on November 30th after reaching the company's mandatory retirement age. This announcement was made in a corporate filing that was signed by Cadbury's head of corporate communication, Frederick Modi. It also marks the second leadership change at the company in 5 years. Adeboye Oyeyimika joined Cadbury's board in 2008 as the finance and strategy director for West Africa, and she became the managing director in 2019, making her the first woman to lead the company since operation began in 1965. I beg your pardon. Her 6-year tenure coincided with one of the toughest periods for FMCG companies in Nigeria. We saw a bit of persistent FX shortages, rising inflation, and high operating costs that eroded industry margins. And this was not just Cadbury alone. We saw it affect Unilever, we saw it affect PZ, we saw it affect the brewers, the Nigerian breweries, international breweries, Guinness. All of them were massively affected by rising inflation as well as the massive devaluation of the Naira. Cadbury also faced some supply chain disruptions and volatile input prices. All of this affected production and stability. However, under Madam Adeboye, they were able to push through. And an analyst says that the company's financial pressures basically mirrored broader challenges that were faced across the food and beverage sector. So, with Adeboye's exit, Cadbury is entering a new transition period as its parent company is Mondelez International is refining its West African growth strategy. This is coming amid weak consumer spending, especially in Nigeria. In the interim, Folake Ogundipe is expected to provide operational leadership. She joined Cadbury in September of 2025 and became finance director shortly thereafter. Her experience spans FMCG, energy services, and industrial operations, including she was the executive director in charge of finance at Unilever just before joining Cadbury. She also worked in PES Group and NigerDoc. Cadbury has not provided a timeline for naming a substantive managing director. So we move on to First Holdco, another news that made the rounds in the market. First Holdco has completed its divestment from FBN Quest Merchant Bank. The financial services holding company on Saturday announced that it had finalized the sale of its entire 100% stake in FBN Quest Merchant Bank to a consortium named EverQuest Acquisition LLP. The confirmation was contained in a corporate disclosure signed by the group company's secretary Abiola Barowa, who said the transaction received full regulatory approval from the CBN. The divestment follows an agreement between First Holdco and EverQuest that was first announced in September of 2024. The company says that the sale aligns with its broader plan to streamline and optimize its portfolio across the group, which includes the First Bank of Nigeria, which is the flagship company in that group. EverQuest Acquisition LLP is a consortium that is made up of Custodian Investment, Aeon Investment, and Evercore Industry, and they emerged as the preferred bidder after what First Holdco described as a competitive process. The sale marks another step in First Holdco's effort to reposition its subsidiary and channel resources towards units considered strategically essential for long-term growth. Neither side disclosed the value of the transaction, but industry analysts say the move reflects the increasing trend of Nigerian financial groups refining their business models and regulatory oversight, as well as evolving market conditions. This move signals more than a transfer of shareholdings. Custodian has diversified interest in insurance, they have in real estate, in pension, and in capital markets. And Evercore, on the other hand, they also have a wide footprint in insurance, energy, and most importantly, food and beverage. Evercore is the major shareholder in Champion Breweries that has now acquired a majority stake in one of the leading energy drink brands. So this acquisition basically suggests that for FBN Quest, there is going to be a little more than just corporate financing. It's going to be a broad interest across different sectors of the economy. Basically, the move is expected to reposition the merchant bank for a more diversified business model beyond just the traditional corporate financing that we see. There is no talking about what happened in the NGX last week without talking about the most important one, Nigeria's switch of settlement system. We saved the best for last. Nigeria switched to T+2 on November 28th, making Nigeria the first country in sub-Saharan Africa to switch to that particular settlement system. In Africa, only Egypt had a prior switch from T+3 to T+2. The Egyptian exchange switched to T+2 in May of 2022, with Nigeria now switching to T+2, makes us just 2 countries in Africa. So, in a major boost for Nigeria's capital markets, the CSCS PLC officially launched a new faster settlement system, a move that is seen as a milestone for efficiency and investor confidence. CSCS is the Central Securities Depository that settles trade that happens on the NGX and the NASD OTC. That's the NASD over-the-counter market. So what this means is that share transfers or business of transferring shares, the buying and selling of shares in the exchange, will now be settled after 2 business days, down from the previous 3-day cycle that we used to have. The CSCS managing director was speaking during a press conference on Friday. He said that the shift reflects months of rigorous testing and collaboration among regulators, exchanges, custodians, and brokers. He described it as a part of modernizing Nigeria's post-trade infrastructure, boosting liquidity, and reducing counterparty risk, as well as speeding up access to funds and securities for investors. The chairman of the CSCS also noted that the change positions Nigeria's equity market among the most competitive on the continent. This shorter cycle is expected to deepen investor confidence, especially among our foreign and institutional investors that are looking for some well-structured and globally aligned markets. If you look through some of the charts, look through some of the other markets in Africa, we see that from Nigeria to Egypt, we're on T+2. However, in South Africa, is a T+3 market. In Ghana, it's also a T+3 market. In Kenya, it's a T+3 market. In Morocco, that's the Casablanca Stock Exchange, it's a T+3 market. Algeria is a T+3 market. And in BRVM, which is the stock market for Francophone West Africa, it's also a T+3 market. However, it's expected that in Francophone West Africa, BRVM is going to be switching to T+2 on December the 4th. The regulatory backer, which is the SEC, approved the shift as part of its long-term capital market master plan, and market shareholders are already exploring the next frontier. They're already talking about a potential move to the T+1 settlement cycle by 2026. For investors, the immediate benefit is clear. So we're going to be having quicker turnover, faster access to proceeds, and lower risk. Meanwhile, for the broader Nigerian capital market, it's a strong signal that Nigeria is looking to align with global best practices. Basically, a welcome development for the sector's growth outlook. With this upgrade, Nigeria is edging closer to global settlement standard. In the US, we have it at T+1. In China, we have it at T+1. Also in India, we have it at T+1. However, in the UK, some of the world's developed market, we still have it at T+2. In Netherlands, in France, we have it at T+1. So Nigeria's move to want to go to T+1 by mid-2026 is a drive to becoming the fastest market in Africa, as we don't yet have any market that settles at T+1 in the continent. After the break, we're going to be returning with a monthly summary of the NGX as well as the market update from last week. Stay with us. Welcome back, and now let's look at the NGX in November of 2025. So compared to what we had in 2024 November 2025, the NGX November 2025, the market was red as in horse blood red. There was a very bearish momentum in the market. The all share index lost 6.88%. We started November at an all-share index of 154,124.46 points. However, we ended it at 143,520.53 points. However, on the bright side, the market closed with a year-to-date of 39.44%. So we are still up from the market's close of 2024. Basically, November was quite a month. However, it's customary that December of every year the market experiences some of its best performances, especially heading towards the end of the year. From the Christmas period, there's usually a market phenomenon that is known as the Christmas rally. So we hope to see, and from early trading data of December the 1st, we already see that maybe the market is already trending in that direction of giving us a beautiful Christmas rally. We're already up by just we're up marginally by just 5 basis points in the market. So if we look at monthly summary of November 2025, we see that all the major indices, all the major sectors that we track in the market basically went down. From industrial goods going down by 13.81%. Banks, on the listed banks, the NGX banking index went down by 5.77%. The NGX insurance index went down by 12.06%. The oil and gas index also went down by 7.33%, while the consumer goods index went down by 3.2%. We had 19 gainers for the month and 82 losers. For a better understanding, we had 19 stocks, 19 equities gain in share price. However, we had 82 stocks lose in share price, and there is no gain saying our top gainer for the month was NCR. NCR has seen quite a bit of a lot of momentum, especially in November. NCR is now trading at 54 naira 65 kobo. This is a share that was trading at around 4 naira at the start of 2025. So we probably have seen that share go up by over 1,000% in 2025. The last time we saw a share go up by 1,000% was with Julie PLC in 2023. So we're probably looking at our top gainer for the year. Then UACN was also a significant gainer. UACN started the month at 16 naira per share, and as at now it's trading at 78 naira 90 kobo, which is almost around 35, is about 30, almost around 30%, almost a third, almost more than a 30% gain. This is majorly due to its completed acquisition. We now have some of the facts behind the figures. We have the facts behind the acquisition of Chi. We see the numbers, and investors are looking at it that a company with a projected revenue of around 700 billion in 2025, it's quite a steal for the amount they got it for, and it's going to have a significant enterprise value. It has a significant enterprise value than what it's currently trading at right now. So we move on from there. Let's look at the market for Friday and last week. So the NGX gained 0.20% on Friday, moving up by 281.3 points. We see our year to date at 39.44%. On that day, we saw about 1.8 billion shares traded, 1.827 billion shares traded in deals worth over 20 billion naira. Last week we saw the market capitalization of the market go up to 91.3 trillion naira. And let's look at some of our top gainers for that day. Ikeja was number one with a 30.25% gain to close at the share price of 10 with a 10% gain to close at the share price of 30 naira 25 kobo. I beg your pardon. NGX Group also went up. NGX Group, the sentiment around NGX Group is majorly around the fact that NGX is the major shareholder in CSCS PLC, and with the move to a T+2 settlement system, the investors are expecting that there's going to be more finance, more trades, more investors coming onto the NGX, considering the fact that we have a faster settlement time now. Academy Press also was a significant gainer of the day, 9.70% to close at a share price of 7.35 naira. Then Umatech Ventures went up by 9.35% on the day, so it closed at a share price of 1.17 naira. Also Cadbury, after news of its new interim managing director, we saw investors pile up on that share, 8.63%. There was a lot of buy pressure on Cadbury. Cadbury closed at a share price of 57.90 naira. On the flip side, Abbey Mortgage Bank down by the maximum 10% to close at a share price of 5.85 naira. Maya PLC down by 9.97% to close at a share price of 13.10 naira. Then Suno Assurances down by 9.89%. Investors are still taking profit on this particular one. They have been taking profit from the start of the year, and even up to November, they are still taking profit. That's to show you the depth of the gains that was recorded on Suno Assurances in 2024, 3.92 naira. Then Sovereign Trust Insurance down by 9.09% to close at the share price of 2.70 naira. Then Linkage Assurance down by 8.02% to close at the share price of 1.72 naira. In terms of trading activity, the most actively traded stocks in terms of volume, we start with Cornerstone Insurance. Cornerstone basically made up a bulk of all of the trading volume on the market. We saw 1.268 billion Cornerstone shares traded in deals worth over 6.4 billion naira. Access Holding also significant trading volume, 103.3 million shares in deals worth over 2.168 billion naira. Ella Lakes was also a significant trader. Ella Lakes there's presently a public offer, a 235 billion public offer that Ella Lakes is offering about 12 billion shares. Ella Lakes saw 82.7 million of its shares traded in deals worth around 1.1 billion naira. Then Consolidated Hallmark Holdings, also 59.138 million shares in deals worth around 232.5 million naira. UBA saw 26.4 million shares traded in deals worth around 956.097 million naira. From Friday, we look at the week ending November 28th. The NGX All-Share Index went down by 14 basis points during the week to close at 143,520.53 points. In the previous week, it closed at 143,722.62 points. Top gainers of that week, number one, Ikeja Hotel. Ikeja Hotel, the operators and owners of Sheraton Hotel Ikeja, were the top gainers of the week. A whooping 45% gain in just 5 days of trading. NCR also continues its miraculous run. A run of NCR in November has been nothing short of a miracle. 32.97% gain to close at the share price of 54.65 naira. UAC was also a significant gainer during the week, 12.71% to close at the share price of 78.90 naira. CWG Group, Computer Warehouse Group PLC, up by 11.84% to close at the share price of 17.95 naira. Veritas Capital also up by 11.25% to close at the share price of 1.78 naira. Let's look at our top losers for the week. Meyer PLC, the paint company, was down by 18.89% to close at the share price of 13.10 naira. Suno Assurances also down by 14.78% to close at the share price of 3.92 naira. UPDC down by 11.93% to close at the share price of 5.02 naira. Amongst our top losers, we also have Tantalizer down by 2.25% to close at Tantalizer PLC was down by 10.36% to close at the share price of 2.25 naira. Abbey Mortgage Bank down by 10% to close at the share price of 5.85 naira. And on the index side, we saw the NGX Banking Index, the only gainer during the week. We track five indexes, 5 sectors on economy and market. We track banking, insurance, consumer goods, oil and gas, and industrial goods. the NGX banking index was up by 67 basis points, 0.67%. However, on a monthly basis, we see that the banking sector was down by about 13%. However, just last week, it went up slightly, 67%, 67 basis points. The insurance index closed a little bit flat, down by 0.07%. And the NGX consumer goods also recorded a decline, 70 basis points, that's 0.70%. Oil and gas index down by 0.23%, and the industrial goods index was the major decliner, 1.92% during the week. In the US, in the US side, last week was quite a bullish week. While it was a contrast of what we experienced in the NGX, we see the Dow Jones index up by 61 basis points on Friday. The S&P index up by 0.54% on Friday, and the NASDAQ composite also up by 0.65% on Friday. In Asia, we see the Nikkei 225, that's the benchmark index of the Tokyo Stock Exchange, up by 17 basis points. However, in Korea, it was a different case. The Kospi index went down by 1.51%, and the Hang Seng index also went down by 34 basis points. That's the Hang Seng index that tracks the Hong Kong Stock Exchange. In Europe, it was a mirror of what was obtainable in the US. We saw positive closes across board from England to France to Germany. FTSE 100 went up by 0.27% on Friday, while the CAC 40 also went up by 0.29%, and the DAX index went up by 0.29%. Finally, to round up the currency side of things, on the currency side of things, the NGX, the Naira closed at 1,447 Naira to the USD, a 7% gain from what we started November at. We started November at 1,454 Naira to the dollar. Against the euros, it was a decline, however, to signify the fact that maybe the USD is declining. Against the euro, we saw the Naira close at 1,678 Naira to the euros, and against the British pound, 1,916 Naira to the British pounds. And that's all we can take on economy and market for this morning. Thank you for staying with us. I'm David Olujinmi.